You know, I've spent 6 decades studying how governments move money around, and I've learned something crucial. When Washington announces a $2,000 payment combining stimulus relief with tariff rebates, most people hear the number but miss the mechanics entirely. That's a costly mistake. Right now, in January 2026, we're witnessing an unusual convergence. The administration is attempting to offset tariff impacts on consumer goods while simultaneously providing economic stimulus through Social Security channels. But here's what nobody's explaining clearly. This isn't automatic money showing up in your account next week. The eligibility criteria matter enormously, and the timeline is more complex than the headlines suggest. I'm going to walk you through exactly how this $2,000 payment actually works, who qualifies based on the current legislative framework, and most importantly, what specific steps you need to take if you're receiving Social Security benefits. Because understanding the difference between what's promised and what's delivered has always been the difference between financial security and financial disappointment. Let's examine this methodically, the way any rational person should approach their retirement income. Now, the first thing you need to understand is that this $2,000 figure didn't materialize out of thin air. It's the result of 2 separate policy initiatives that the current administration decided to bundle together, and that bundling creates both opportunities and complications. The stimulus portion, roughly $200 of that total, is designed to provide direct economic relief to households that have been squeezed by inflation over the past several years. The remaining $800 represents a tariff rebate, which is Washington's attempt to return money to consumers who've been paying higher prices on imported goods due to the tariff policies implemented over the last administration and continued into this one. When I look at this structure, I see something that reminds me of the tax rebates we saw back in 2008 and the stimulus checks during the pandemic years. The government has a fundamental problem. They need to inject money into the economy quickly, but they also need to use existing infrastructure to do it because building new distribution systems takes time and money. That's why they're leveraging the Social Security Administration's payment systems. The SSA already has your banking information, they already have a monthly payment schedule, and they already have verification systems in place. It's the path of least resistance, which in government work usually means it's the path that actually gets taken. But here's where it gets interesting, and this is where most of the confusion enters the picture. Just because you receive Social Security benefits doesn't automatically mean you're going to receive this combined payment. The eligibility requirements are more nuanced than that, and understanding these nuances could mean the difference between receiving $2,000 or receiving nothing at all. The primary eligibility criterion is income-based, and this is where they've set up a threshold system that's going to catch a lot of people by surprise. If you're a single filer and your adjusted gross income for the 2024 tax year was below $75,000, you're in line for the full $2,000 payment. For married couples filing jointly, that threshold jumps to $150,000. Now, I know what you're thinking because it's the same thing I thought when I first looked at these numbers. Most people receiving Social Security aren't anywhere near those income levels, and you'd be absolutely right. The median Social Security benefit in 2025 was approximately $1,920 per month, which works out to about $23,000 annually. Even if you add in some supplemental retirement income, the majority of Social Security recipients are going to fall well below these thresholds. However, and this is crucial, the income calculation includes all sources of income reported on your tax return. If you're still working part-time, if you're receiving pension distributions, if you have investment income from rental properties or dividend-paying stocks, if you're taking required minimum distributions from your retirement accounts, all of that gets added into the equation. I've seen too many people over the years who assume that because their Social Security benefit is modest, they automatically qualify for means-tested programs, only to discover that their total income picture pushes them over the eligibility line. There's also a phase-out structure built into this payment system that operates on a sliding scale. For every $1,000 of income above those base thresholds, the payment reduces by $50. So if you're a single filer with an adjusted gross income of $80,000, you're $5,000 over the threshold, which means your payment gets reduced by $250, leaving you with $1,750 instead of the full $2,000. The payment phases out completely once you hit $115,000 for single filers or $230,000 for married couples filing jointly. This kind of gradual reduction is actually more sophisticated than the cliff edge cutoffs we've seen in previous stimulus programs, but it also means you need to do some arithmetic to figure out exactly what you're entitled to receive. Now let's talk about timing, because this is where the government's promises often collide with operational reality. The official announcement states that payments will begin processing in February 2026, with the majority of recipients receiving their money by the end of March. That's the optimistic scenario, and in my experience, optimistic government timelines have about a 50-50 chance of meeting reality. The Social Security Administration is a massive bureaucracy processing benefits for roughly 67 million Americans every single month. Adding an additional payment program on top of that existing workload creates bottlenecks and complications that aren't always visible from the outside. The payment delivery method will follow your existing Social Security payment preferences. If you currently receive your benefits via direct deposit, the combined stimulus and tariff rebate will arrive the same way. If you still receive paper checks, and there are millions of beneficiaries who do, you'll receive a separate paper check for this payment. One thing I want to emphasize here, because it's a common source of confusion, this is not an increase to your monthly Social Security benefit. It's a one-time supplemental payment that's being administered through the Social Security system but funded through separate legislative appropriations. Your regular Social Security benefit amount remains unchanged. There's an important verification step that many people are going to overlook, and overlooking it could delay your payment significantly or cause you to miss it entirely. The Social Security Administration is cross-referencing their beneficiary database with IRS tax filing records to verify eligibility. If there's a mismatch between the information the SSA has on file and what the IRS shows for your 2024 tax return, that creates a flag in the system that requires manual review. Manual review in a government agency means your payment goes into a queue, and queues can take weeks or even months to clear depending on staffing levels and workload. Here's a practical example of how this mismatch might occur. Let's say you moved in 2024 and updated your address with the Social Security Administration but forgot to update it with the IRS when you filed your taxes. Or perhaps you got married or divorced during 2024 and your filing status changed, but the various agencies haven't synchronized that information yet. These kinds of administrative discrepancies are incredibly common, and they're the primary reason why some people receive government payments promptly while others experience frustrating delays. What can you do to minimize these risks? First, verify that all your information is current and consistent across agencies. Log into your My Social Security account online and confirm that your address, direct deposit information, and basic demographic details are accurate. Then check your most recent tax return and make sure the information there matches. If you spot any discrepancies, now is the time to fix them before the payment processing begins. Waiting until March to discover that your payment went to an old address or an old bank account is a headache you don't want to deal with. Second, understand that you don't need to apply for this payment if you're already receiving Social Security benefits and you filed a 2024 tax return. The system is designed to identify eligible recipients automatically. However, there's a significant exception to this automatic process, and it affects a specific group of beneficiaries who might not realize they need to take action. If you receive Social Security benefits, but you weren't required to file a 2024 tax return because your income was below the filing threshold, the IRS doesn't have current income information on you. In that case, you may need to use a simplified filing tool that the IRS will make available, similar to the non-filer tools they created during previous stimulus rounds. This creates a peculiar situation where some of the lowest income Social Security recipients, the people who arguably need this money most urgently, might have to take an extra step to receive it. The IRS has indicated they'll launch a streamlined online portal by mid-February where non-filers can submit basic information to claim their payment, but the details of how that portal will function weren't available at the time this legislation was finalized. Based on previous iterations of these tools, you'll likely need to provide your Social Security number, date of birth, current address, and banking information for direct deposit. The process should take about 15 minutes if you have all your information ready. Now let's address the elephant in the room, which is the question of whether this payment will affect your other benefits. This is a legitimate concern because many Social Security recipients also receive supplemental security income, Medicaid, SNAP benefits, or other forms of assistance that have strict income and asset limits. The good news, if we can call it that, is that this one-time payment is explicitly excluded from income calculations for federal benefit programs for a period of 12 months from the date you receive it. That means receiving this $2,000 won't jeopardize your eligibility for these other programs, at least not immediately. However, there's a catch, and it's one that demonstrates why you need to think carefully about how you handle this money. While the payment itself doesn't count as income for benefit eligibility purposes, if you deposit it into your bank account and don't spend it, it becomes a countable asset after that 12-month exclusion period expires. Many means-tested benefit programs have asset limits typically around $2,000 to $3,000 for an individual. If you're already close to those limits and you add $2,000 in cash to your accounts, you could potentially exceed the asset threshold and lose eligibility for certain programs down the road. This isn't meant to scare you away from accepting money you're entitled to receive. It's meant to make you think strategically about how you use it. If you have outstanding debts, medical bills, necessary home repairs, or deferred expenses that you've been putting off, this might be the ideal time to address those needs. Spending the money on legitimate expenses eliminates it as a countable asset while improving your financial situation. What you want to avoid is simply parking it in your checking account and forgetting about it, because that's when you run into potential complications with asset-based eligibility requirements. There's also a tax dimension to consider, though it's relatively straightforward compared to some of the other aspects we've discussed. The stimulus portion of this payment is not taxable income at the federal level. It's structured as a tax credit, similar to the recovery rebate credits from previous stimulus rounds, which means it doesn't get added to your gross income when you file your 2026 tax return. The tariff rebate portion is similarly excluded from taxable income under the specific provisions of the legislation that authorized it. So the full $2,000 is yours to keep without worrying about it increasing your tax burden next year. However, and this is an important however, state tax treatment can vary. Most states conform to federal tax law on these matters, but not all of them do automatically. If you live in a state that has its own income tax system and doesn't automatically adopt federal exclusions, you might find that this payment gets treated differently at the state level. The states most likely to diverge from federal treatment are those with independent tax codes that don't automatically incorporate federal changes, and that includes states like California, New York, and a handful of others. You'll want to check with a tax professional in your state or wait for guidance from your state's Department of Revenue before assuming the payment is completely tax-free at all levels. Let me share something I've observed over many decades of watching how people respond to unexpected money. There's a psychological phenomenon where one-time payments tend to get spent differently than regular income. When you receive your monthly Social Security check, you've likely developed habits and systems for how that money gets allocated. You know how much goes to rent or mortgage, how much goes to utilities, how much you set aside for food and medication. It's routine, it's predictable, and that predictability helps you manage your finances effectively. But when a $2,000 payment shows up that wasn't part of your regular budget, the temptation is to treat it as found money, as something extra that exists outside your normal financial framework. And that's when people make impulsive decisions that don't serve their long-term interests. I'm not suggesting you need to be joyless about receiving this money. What I am suggesting is that you treat it with the same deliberate thoughtfulness you'd apply to any other financial decision. Ask yourself what would provide the most value, what would reduce your financial stress most effectively, what would improve your security and stability over the coming months and years. For some people, that means building or replenishing an emergency fund. If you don't have at least $1,000 to $2,000 set aside for unexpected expenses, this payment gives you the opportunity to create that cushion. For others, it might mean paying down high-interest debt, particularly credit card balances that carry interest rates of 15, 20, or even 25% annually. The return on eliminating that debt is guaranteed and substantial. For still others, it might mean addressing deferred medical or dental care, getting necessary prescriptions filled, or making home modifications that improve safety and accessibility. The worst thing you can do is spend it reactively without thought. And the second worst thing you can do is let someone else spend it for you. Every time there's news about government payments to seniors, the scammers come out in force. You're going to receive phone calls from people claiming to be from the Social Security Administration or the IRS who say they need to verify your information to process your payment. You're going to receive emails and text messages with links that supposedly let you check your payment status. You're going to encounter websites that offer to help you claim your payment faster for a small processing fee. All of these are scams designed to steal your personal information or your money. The real Social Security Administration will never call you out of the blue asking for your Social Security number or banking information. They will never ask you to pay a fee to receive a benefit you're entitled to. They will never send you a link via email or text message asking you to verify your identity. If you need to interact with the SSA about this payment or anything else, you initiate that contact yourself by calling their official number or visiting their official website. The same principles apply to the IRS. Legitimate government agencies don't operate through unsolicited phone calls and suspicious links. As we move into February and March, when these payments start processing, you're going to see a lot of noise in the media and on social media about who's receiving payments and who isn't, about delays and problems, about conspiracy theories suggesting that certain groups are being prioritized or deprioritized. Most of that noise is just that, noise. The reality is that the Social Security Administration processes millions of payments efficiently every single month. And while this additional payment creates extra work and some complexity, the fundamental systems are sound and tested. What you need to focus on is your own situation. Make sure your information is correct and current. Understand whether you need to take any additional steps because you weren't required to file a tax return. Know approximately when you should expect to receive the payment based on your normal Social Security payment schedule. And have a plan for how you're going to use the money in a way that serves your best interests. Everything else is just speculation and distraction that doesn't advance your financial security one bit.